Welcome to this series of bite-sized video podcasts in which members of the owner-managed business group at Trowers and Hamlins interview some of our leading clients and contacts for insights on what has made them a successful entrepreneur. Today, I'm really pleased to be joined by Dan Sutherland. Dan is a serial entrepreneur and investor in tech and biotech. Dan, thank you for joining us today.
Thank you for having me.
So Dan, to kick us off, do you want to tell us a little bit about yourself and what you think makes a successful entrepreneur?
Yeah, I've run businesses, tried to run businesses ever since I left school, actually, ever since I was at school, with varying degrees of success. The biggest traction I got was with a company called Carrenza, who were an IT services company, which I exited pushing 4 years ago now, or maybe 5. And since then, I have been primarily investing in early stage tech and biotech companies. And although I swore blind to myself and my wife I wouldn't try and do any more startups once I'd sold Carrenza, I didn't keep that promise. I'm currently working on a new startup, which is really exciting.
Thanks, Dan. And what do you think makes for a successful entrepreneur?
That's an interesting question. There are questions there about what success is and what defines an entrepreneur. But I think however you're doing it, a degree of determination bordering on bloody-mindedness, a belief in the thing that you're doing that carries you through what will inevitably be quite tricky times, and an ability to engage and persuade and cajole and drive other people to join your conviction that what you're doing is a good idea and help you with it along the way. It's almost impossible to do it on your own.
So at Trowers and Hamlins, we talk a lot about the culture of our firm. How would you describe the culture of the businesses that you founded?
I try and remember that businesses are groups of people, and that people are all individual, and that they have needs and things that are calling on their time that are not just being part of that business. When somebody works in one of my businesses, I know they are giving a proportion of their waking time to doing that. And I think if you recognize that that is a part of the deal, a part of the trade-off that you have that comes with remuneration and all those other things, but ultimately I think you need to be flexible about the time people spend doing the things that they're doing, and treat them as humans and treat them as responsible, and if they're treated like that and with respect, you get a much better team, and you get a group of people who are there because they share the values of the business, and feel as though they are valued and welcomed in the team that they're in.
Makes sense. Okay, so next question for you. Thinking back to when you exited Carrenza, what went well, and with the benefit of hindsight, which is always 2020, what would you have done differently?
The process of finding potential acquirers, persuading the potential acquirers that they all really needed to have it so that they were arguing with each other a bit, went very well. The process of doing the sale was by and large pretty smooth, although I look at that from a hindsight point of view because I've been through a few more now, and actually it was a lot smoother, that one, than I realized it was at the time. I think I probably felt some of the late nights were unnecessary, but actually it was a lot easier than things I've done since. What would I have done differently? I think I would have prepared better for the unexpected, particularly later in the process. Things happened that were completely off the radar in terms of things that any of us had considered or thought about, which, with a bit more careful scenario planning and thought, we could have tackled in the process of the initial sale to an extent that would have allowed us to mitigate some of the challenges that we faced. I'm thinking specifically, we kind of felt like our company was being acquired by another company, and the management team at the new company were great, and we gelled with them, and that was an important part of feeling as though the culture of the business and what we were doing would be continued. Mm-hmm. We really hadn't anticipated or considered, and we should have done, that management team might all go. And indeed that they might go somewhat acrimoniously. Therefore, the team that came in to tidy up that situation might look back on it and say, maybe the deal that was done wasn't as good a deal as the people who did the deal thought it was, and feel more negatively about us and it than would have been the case if the original management team had carried on in place.
Yeah, it's a great point. Often sellers get on very well with the people they're selling to, but you have to think about what will happen if that management team is replaced in a year or so's time, and there's someone new looking at this from cold.
And I think as a consequence, perhaps people place too much importance on getting on well with the people who are going to be acquiring your business. I think the process of acquiring the business is somewhere between a house sale and a divorce, and realistically, at the end of that, they're neither your wife nor your house, and so probably worrying too much about those things in the medium term is pointless.
Yeah, good advice. So what advice would you give to entrepreneurs who are looking to appoint a professional team on a sale? So I'm thinking of lawyers, corporate finance advisors, accountants, or the like.
This is going to sound contradictory to what I've just talked about, but I'm going to say talk to lots and lots of them. Find people that you can work closely with, because for a while you're going to spend more time with those people than you will with your family. You are going to spend more time with them than you normally would with your colleagues, and so make sure they're people you like and trust. And in the grand scheme of things, of course, the cost of things is important, but it's less important once you've sold the business and got a check in one pour, than it will feel like it is when you're going into the process. You're better off having the best advisor by your side, because they will probably make you more money than they're charging you.
Yeah. And being able to get on with someone is key. I think people tend to instruct the individual really rather than the firm. Okay. Timing is obviously of crucial importance when you're exiting a business. How did you know when the time was right to exit?
So I think I don't agree. I don't think timing is crucial.
It's fine.
I think that I think trying to time the sale of your business is like trying to catch a knife that someone's already thrown at you. And I'm not a circus performer, so I think it's more about realizing that the possibility that has arisen is one that you feel happy and comfortable with, and you're not feeling as though you've sold yourself short in some way. And then work with some good advisors to get a good deal. and take the deal and don't look back, because anything that any profit you didn't take or any money you could have made, it's paper money, it was never there. So provided you've done a deal that is a good deal for both sides, that that you're happy with, that's good timing. If it's not a deal you're going to be happy with, don't do the deal, unless you absolutely have to, in which case you should probably be happy with it because you have to do the deal.
Yes, that's right. Okay, changing gears slightly. Do you have someone who acts as a sense checker on your ideas?
I do, yeah. I actually have I have three people, now old friends who I've worked with for years, who I always talk through what I'm doing with, and I know them now all well enough that I kind of know what their responses are going to look like, but it's still enormously valuable to have somebody else look you straight in the eyes, and you know that the response they're going to give you will be sensible and well thought out, and something that you really ought to consider, because it's not impossible that you're pretending to yourself it doesn't matter. So yes, absolutely have advisors. I would say it doesn't matter who they are. You don't need to feel as though your sense checker is, I know, it could be your gran if she gives you great advice. It could be anybody. It could be a friend you walk dogs with. But have those people, because they take you out of your bubble of comfort.
Great. Okay. Thinking about the old entrepreneurs relief regime, now called the business asset disposal relief. That's obviously changed the lifetime allowance from 10 million to 1 million. Do you agree with that change? And are there any other policy changes you'd like to see to encourage entrepreneurship in the UK?
So I do agree with it. And I don't agree with it. So I actually think that the entrepreneurs relief regime is a disincentive. I would prefer it didn't exist at all. I think the current 20% rate of capital gains tax is already a significant discount on income tax.
Yeah.
And I think the people who benefit from the entrepreneurs relief scheme don't necessarily need to. I would also say that it encourages people to sell businesses that they might not otherwise sell, and that doesn't create long-lasting wealth and opportunities and jobs. It creates a short-term opportunity to buy a new house. And so on that basis, I think most entrepreneurs don't do it once and then not do anything else again. Most of them will go and do more things of one kind or another. I know so many entrepreneurs who have exited a business and then they have opted not to run new businesses, but just to get involved in other businesses or invest in other businesses, because they've used up the tax advantage of entrepreneurs relief. Those are people who could and should be running new companies and probably would want to if they didn't feel disincentivized from doing so. So what I would do would be to get rid of the scheme altogether, but I would allow entrepreneurs to, rather as is done with EIS and SEIS, I would allow them to defer tax and offset capital gains tax in some cases altogether, if the money that is being taken is spent on developing new businesses. So if the proceeds of a sale can be used to fund the investment in new businesses, then I think it shouldn't be taxed, because that creates and generates the creation of new wealth.
Thanks. Okay. Well, look, that's been great. Before I let you get back to your day, one final question. Having grown at least one business from the ground up, have you got any final tips you'd pass on to budding entrepreneurs?
Find something that you love, believe in, are passionate about. Find a path in your head that shows you how you can make it succeed. You may be completely wrong, but you will have a plan from which you can delta if circumstances change, and follow and stick to that plan. And it doesn't have to be in a spreadsheet. It doesn't have to be in a long document with business plan written on the cover. It can be a single side of A4 with 10 bullet points that are just kind of, I'm doing this for this reason. This is who I'm going to help. This is why I'm going to help them. This is where we're going to go. This is my ambition. And remind yourself of that continuously, focus on it, and use it to stop you deviating too far from what you originally wanted to do. Business is about planning, data, and people. And if you get those three things in a line, you've got really good opportunity to succeed. There's a lot of other things too, but those are the ones that will be around you and help you and answer your questions. So have a good idea, have a plan, have some good people, believe in what you're doing. That's great. Thanks, Dan. Okay, well, look, thank you for sharing those thoughts with us today. I really enjoyed the conversation. For those watching, please do like or rate this video podcast and leave your feedback, and subscribe to the Trowers Business channel, and look out for the next in this OMB series. If you need any help or assistance, obviously, please feel free to reach out to your usual contact at Trowers or visit trowers.com/OMB. Thank you again for watching this, and goodbye.